Ladies and gentlemen, how's everybody doing today? How is everybody doing today? There was some confusion in the chat. No, there's a new Noto interview. I am not I promise you it would be a much larger deal and it would not be on a fintech frenzy that I'm interviewing Anthony Noto, but he did get interviewed, which is essentially just as amazing because we get to hear new information about Anthony, about SoFi, and the state of his company, maybe even about the state of the consumer. I'd want to watch through this with you guys, stop whenever I have comments, everything like this. So why don't we go ahead and get started? Let's do this. So let me know if you guys can hear this.
Credit card balances 60 plus days past due.
You got that? That's all coming through. Let's go, says Joel. Let's go, brother.
Hitting their highest level in more than a decade in the first quarter. That's according to the Philadelphia Federal Reserve. Meanwhile, the number of 401k millionaires reaching an all-time high in Q2. So what does this tell us about the health of the consumer and investing trends? Let's ask one of the biggest players in the fintech space, SoFi CEO Anthony Noto. Welcome back, Anthony. It's good to have you. What are you seeing on the delinquency front?
Well, Sarah, thank you for having me, and I appreciate coming on there. In terms of consumer activity,
one day we're going to get him on this show. I tweeted out to him today. Hopefully he responds, but yeah.
More broadly, and then I'll talk specifically about the credit card business. Consumer activity and sentiment is trending okay. And I think as long as the Federal Reserve cuts rates 25 to 50 basis points, that trend will continue. A couple of data points that we're seeing that should be instructive for the audience is what's going on with the SoFi member. Again, a SoFi member is a higher income member, higher credit, but it is indicative of some part of the market. We're seeing debit spend continue to be very strong. It was strong in Q2 and continues to be strong in Q3. But importantly, that debit spend is not coming at the expense of deposit growth, which also remains strong.
Both spend and deposit growth looking strong in Q3.
The second data point I would share with you is in our invest business. We saw about 50% growth in net flows in Q2 in our assets in our invest business, with a lot of interest in alternative assets, which we launched at the beginning of the year, but diversified investments like ETFs and robo. And we're seeing strong net flow growth again in Q3 as well.
Strong net inflow growth in Q3. That's the triple whammy right there. We got better deposits than expected. We have better spend than expected, and then also net inflows on their invest business.
And then on credit cards, to your specific question, our portfolio is quite small. It's growing nicely. We are seeing improving entry rates into delinquency. We cited in Q2 that we saw a 20% improvement in entry rates into delinquency compared to 2023. And we're seeing continued credit performance trends in line with expectations in Q3 in credit cards, as well as personal loans, which is a good outlook.
So when you see the market throw a big fit like we saw yesterday on worries that maybe they're not pricing the recession as much as, say, the bond market, what do you think? It doesn't sound like you're seeing any kind of big red flags.
Well, I'd say two things. One, we do have a higher income customer, and they also are higher in credit, so they're not going to be fully representative of the broader market. A subprime customer would be experiencing different trends, and even middle America would be experiencing different trends. But I do believe what we're seeing is a piece of the puzzle. If we don't see Fed action of 25 to 50 basis point cuts, then the concerns on the macroeconomic front will become a reality, and we will go into a recession. But I think the Fed understands the importance of the cuts that are coming. I hope they move with 50 basis points. It gives them more optionality. It'll be more impactful to corporate America, and it will definitely be more impactful for the consumer.
So they are fully pricing in SoFi, meaning a rate cut. I mean, so is the market, 100%. I think last time we checked, it's like 46% chance of a 50 basis point cut. Anthony Noto is calling for a 50 basis point cut here. He's been a little bit more ballsy, not just going with the flows, but actually asking for the Fed to make some moves here. They obviously will. September is all but, I mean, it's a guarantee at this point. Jerome Powell himself said it, and all the information that we're seeing follows that as well. But it's interesting to call out to 50 basis points. I still cannot see that happening from Jerome Powell. I think we'll see multiple consecutive 25 basis point cuts, but I can definitely be wrong.
And I think waiting to move that amount could be taking more risk than is necessary, given where unemployment is trending and given where we're seeing things like Jolt's report today.
Hey, Anthony, it's Carl. This week, the Journal did a piece on Americans and how good, the Journal argues, they're feeling about their 401ks. We've seen the number of $1 million 401ks at Fidelity. I wonder how you think your consumer is thinking about their equity gains and how reliant they are on this so-called wealth effect. What would happen, for example, if we had a severe correction?
Yeah, so far we're not experiencing spending due to a wealth effect. We're seeing spending based on income. Debit spending and deposit trends are the first indication of that. If asset growth slows, then we'll in fact start to see some risk in debit spending and deposit growth. But right now, asset flows have continued to grow as people have gotten good returns, both in their 401k and their discretionary investing as well. So think of it as a ladder effect. First, net flows will slow and go negative, and then you'll see a decline in deposit growth and then a decline in spending. And right now, we're actually seeing an improvement in net flows, improvement in deposits, as well as spending.
And have you seen any early indications that homeowners with a lot of equity, and there are a bunch of them, are interested in tapping that if they need to in the next year or two?
Yes, absolutely. The day that we had the yen carry trade disruption in the marketplace where we saw rates drop significantly, we saw a doubling in our mortgage locks per day. Now, our mortgage business isn't huge, and that trend wiped away the next day when rates went back up, but it is indicative of the amount of pent-up demand that is out there for home equity loans as well as refinancing. The amount of
It's a very small piece of data that they're grabbing, but the fact that they doubled just based on that yen carry trade for their line of credit on their mortgages is still quite interesting for them to even see such a large drop. Like I said, and like he said, it's extremely small.
increased demand that we saw in that one day is a clear indication that people are waiting for the opportunity to refinance their homes. They're also waiting for the opportunity to refinance their student loans. We saw increased demand a couple of days there as well on the back of that yen carry disruption. So I do think if there's a 25 to 50 basis point cut in rates, it'll be very beneficial to those that need to refinance, for those that have equity in their home and can take some equity out at a lower cost. And then don't forget the people that have bought their homes with ARMs that will be adjusting each year. And so a 50 basis point or 75 basis point cut going into 2025 could be really beneficial to the individual consumer. The other thing I don't think gets talked about enough is what are corporations thinking right now? What are they doing right now? Well, they're doing 2025 planning. They're thinking about their hiring plans for 25, their technology spending plans for 25. If they could lower their interest expense by 75 basis points with that amount of rate cuts between here and next year, they're going to go in more optimistic on spending, which will help our economy and hopefully help unemployment as well.
I just wanted to ask you about student loans because it's part of your business.
So is that his prediction or is that his hopeful outlook of 75 basis points out to 2025 or from the point of the start of 2025? 25 basis point cuts. If he's calling for a 50 basis point cut, 2 cuts. Regardless, I mean, still very interesting.
As well, and it's this political football, right? Can you just tell us where we stand in terms of student loan forgiveness and expectations by borrowers of student loan forgiveness and how that might change after the election?
Sure. First, just for the viewers, the company was built on the back of student loan refinancing, but now it's a very small part of our business. And in fact, in Q2, lending overall fell to only 55% of our revenue, where tech platform and financial services increased to 45%. And we expect by the end of the year to be 50-50 revenue split. So it's a much smaller piece, but it is a big opportunity for us. If rates do get cut and there is some clarity on the student loan reform, which I think there continues to be, there will be a lot of demand for refinancing student loans. I don't believe the president's desire to forgive student loans outside of those areas where people have been harmed or misled will be successful. The Supreme Court has ruled. Other politicians are firmly against it. It's unconstitutional for the executive office to make a decision as it relates to student loan relief, and it would have to go through that congressional process, and there's just not support for it. I think right now consumers are being confused by the rhetoric that's really about the election and getting more votes. But as rates come down.
Look at Anthony Noto coming out and calling it like it is. That's exactly what we said, right? Like the people who we're part of these sort of fraudulent schools and that were just collecting this money that was not due to them. Obviously, refund their money. That's fine. Give some loan repayments there. All right, that's been handled already. But now you're talking about just giving people payments just because they've been paying for a certain period of time. It just doesn't quite add up fully, at least in my head. SoFi, for the most part, any of those loans that they were sort of, targeting towards lower income individuals or people who have been paying for too long, these sort of individuals were not going to be SoFi student loan members anyways. But still, I think it helps the stock case if the total addressable market for student loans is larger. Is it better for the total American people? I don't know. But that's not the judgment that I'm making. I'm making, is it best for this one security? And it definitely is. And then on the other side of that, I like that he's just calling out the fact that there might be a little bit of just, hey, how do we buy, a couple of extra votes because we're making these sort of strong plays towards student loan forgiveness right at the end of this election. I mean, it's just ridiculous. Or not the election, but the presidency.
They should refinance if they can save money because there's no frictional cost to refinance their student loans. There's no fees and there's no prepayment penalties. But they need to be very cautious about any belief in student loan reform and making sure it's very clear and it's certain before they make decisions.
Love it, Noto. Appreciate you coming on. Not on the channel directly. However, I did ask him directly. I've been sending a couple DMs to him, emails to SoFi, but I'm just making it a little bit more apparent. So if you guys could, hit the like button on this, but mainly comment and at Anthony Noto, at SoFi, at their IR teams, allow them to get a better sort of overall view of the fact that you guys do want Noto or other members of the team looking at or responding directly to retail investors. I think that this is important. I think that some of my emails can just be easily pushed to the side because, I'm just another guy. But if you can see like a pretty large retail base asking for this to happen, I mean, it's just a little bit too much, We'll see. We'll see. Yes, PDA is public display of affection. Someone was like, is that what you want to kiss Anthony Noto? No, I'm loving up on the guy and I want to have a conversation. And maybe if I can get a couple smooches. No. So I saw this. I wanted to show you guys this. Here. Why isn't it going to the link? There we go. I saw this piece of news. I don't know. I could not find another source for this. So it would be, I don't know, a lot to go through to fake this. But this Ben Alderton said, shows off JP Morgan Securities adjusting PayPal's price target from $82 to $125 a share. That's a massive, massive increase, roughly just a little over 50%, or actually almost exactly 50% increase, which is very exciting. The stock didn't quite move on this, but that makes them the largest price target for the company going forward. And I'd be very excited to see how that goes. To talk about some of that, rate expectations like Anthony Noto was talking about, he's calling for a 50 basis point cut here. Well, 45% of the market is now anticipating that as well. 45%. We did a poll recently on this chat, probably, 2 weeks ago, saying, do you guys think it'll be a 25 basis point cut or a 50 basis point cut? And I think like 25% of you guys said there will be no cut. I cannot see that happening. I'd love to see you interview Derek White. It's the FinTech Frenzy. Why not? Galileo is made for the FinTech Frenzy. So I would absolutely have Derek White on, Miguel Santos, any of these guys. They would be excellent, features for the podcast, obviously. But they have some higher ups. As weird as it sounds, it's actually easier sometimes to get the CEOs of the company on this platform, because if they want to come on, then it's as much as telling the RAR teams, hey, figure it out, right? Rather than, some of the lower end guys or executive management teams that could be risking something by coming on here. If, for example, Anthony Noto is not coming on, well, then it's going to actually look potentially bad if one of his coworkers or the people that work underneath him are coming on the show. And, maybe, I don't know why he wouldn't want that, but he must have a reason. It's not a matter of him not knowing that we don't exist. That we've heard time and time again. So who knows? Another interesting piece, he talked about, the state of the consumer, defaults holding at a steady rate, not looking too bad. Well, Upstart is one of these very interesting companies that, whether you like them or not, they have some pieces that they track that could be very interesting to, individuals in this fintech space like you and I. And one of those is UMI, which is them tracking the health of the overall lending market for defaults and overall performance of these loans. Now, as this has climbed up past 1 times, okay, so 1 times is sort of the benchmark rate. Anything below that is really great territory. Anything above that is really bad territory, okay? This had climbed up to 1.69 at its highest of April of 2024. Let me give you guys an extra big zoom here. It went away. Did it go underneath? All right, we'll just look at it here then. But then in just the last little bit, we saw May, it dropped a little bit. And then in June, a massive decrease to 1.5 times. Now, this was amazing. The stock got a big bump on this. Credit in general got a big bump on this. And July seemingly is holding up an okay rate. It's not continuously dropping, but the same sort of rhetoric that Anthony Noto is saying, where they're holding steady, we're also sort of seeing this through Upstart as well. So the information that Anthony Noto is giving us is much more present than seeing the old July numbers, but still July numbers are much better than looking through Q2 numbers from some of these companies as well. So who knows? We're also going to have to track, how SoFi is selling loans, if there are any wholesale market, personal loan sales going through. I'll let you guys know. I haven't gotten word of any of them just yet. So we will hear. I should have bought an Upstart instead of SoFi, says, oh, yeah. Yeah, I mean, you can say that about, there will be a stock that had performed better than Upstart that you should have bought, and another company that was better than that you should have bought. This is a dumb comment. I'm sorry, brother, but buy companies that you think will go up over the long term. That is so much easier to track than what you can control in the short term. Okay? However, that being said, it was a very easy call to buy Upstart. I said it whenever it happened. If, for example, there is anticipation of rate cuts, Upstart was going to do phenomenally. But then you're betting on the idea of rate cuts. Right now, it's a certainty. But before September was coming up, it wasn't. So figure it out. Everything is easy. And stock markets is the easiest game if you're looking retroactively. Hindsight is 2020. But yeah, I thought that this was interesting. In other fintech news, we're looking at PayPal for a second. Now, if you guys don't know me, before I get into PayPal, I am also an investor in cryptocurrencies. I have 3 cryptocurrency coins that I'm invested in, not securities that are, adjacent to crypto, like Block or Coinbase or something like that. I mean, just coins. Okay. I hold Solana very much at the very, very top, then Ethereum, then Bitcoin. Ethereum actually had surpassed Bitcoin as my number 2, but Solana has always been my top dog, and it's by far the largest. I've always liked it, not because I'm a cryptocurrency, like I believe in the true value of these things. I mean, I'm aware that they derive value because of other people's beliefs. However, Solana is a little bit different. It's a true utility coin. Meaning, for example, it's cheaper to run a Solana transaction than Visa is to run their transaction, or even a Google search, for example. That I do think has real value. And if they can actually end up, running a transaction through Solana cheaper than Visa or something like this, maybe this could be good for fintechs in actually incorporating this to lower their operational expenses or transactional expenses. Let's take a look at a company that is at the forefront of this, taking advantage of something like Solana to potentially save some costs.
There is a big announcement that recently came out with PayPal and Solana.
PYUSD is now being issued on the Solana blockchain.
This decision to go to Solana was a very easy one. We need for retail payments transactions throughputs that are north of 1,000 transactions per second. We need low cost of transaction, and we need many of the features that are enabled now by Solana token extensions.
The ability for a merchant to accept a stablecoin from a consumer in a truly peer-to-peer fashion. It's like digital cash.
Yeah. So PayPal is officially transacting more through Solana than Ethereum or their ERC20 tokens, which is actually what they originally started out with. So although getting quite the head start, it is more beneficial for them to take advantage of the Solana blockchain. So sort of a double whammy for me. I'm a shareholder in PayPal, which got a good upgrade today from JP Morgan. I'm still looking to verify that. However, we're going to be able to see later on. But then also the fact that they could be lowering their transactional margin, not just for someone brought up that they're using this for Zoom transfers, which is their international exchange. But what I also really like about this is that they could actually be settling a lot of their transactions to vendors and everything in PayPal USD. Okay. And if they can start using PayPal USD to save money internally, you could see a lot of their internal transactions or transaction expenses start to come down. It's very, very interesting. So what are you guys buying, by the way? This is something I just saw Payush in the chat say that they're buying SoFi right now. There's a couple stocks that are just absolutely ripping and dipping in this market. Lots of red. What are you guys buying? Or are we waiting for lower lows in this September markets? What are you guys saying? Celsius dropped 11%. I saw that. I'm still not touching it. And maybe a little bit of that is just my own behavior. I have not purchased Celsius in a while. Buying Clover Health and SoFi. This man likes risk. Hims and Micron, cool. Apple and PayPal. That is such an interesting. So for the members of the chat, we did a conversation with, maybe that was just on the SoFi Weekly. Maybe that wasn't even the members chat. We talked about the comparison between Apple and PayPal and why would you ever buy Apple whenever you can buy PayPal in this market. Now, I know that sounds crazy. One is one with a struggling brand and the other one is one with a very, very strong brand. But one is unbelievable multiples more expensive in terms of a PE ratio, for example. Apple, much more expensive than even what the S&P 500 is trading at, which should be hard for a company like Apple, considering they have the largest weighting in the index that we're actually comparing it to, which makes it kind of hard for it to break away, right? But it still has a much higher PE ratio than the overall S&P 500. And they also buy back less shares and grow slower than PayPal does. So PayPal grows faster. They are buying back more of their shares, and you can get them at half the cost. And I don't mean half the cost in terms of market cap. I mean half the cost in terms of a multiple. Which, if you guys don't understand that, I mean, you're buying companies for multiples of their earnings, multiple times. Hopefully that makes sense. Hopefully I don't have to go all the way to the basics. Rob says, I just buy 3 that I believe in: SoFi, Tesla, and triple QQQs. Hilarious. This man is a long-term bullish investor. The triple Qs. Well, triple leveraged, if anyone wants to follow that. Cool. Awesome. Ooh, Dream has all his price targets up for where he's buying all these companies again. I wonder if those prices have changed, Dream. Have they? SQQQs will print soon. These are fighting words for the Bulls. All right. Cool, man. I mean, in other news, there was not much left. Interactive Brokers saw a 40% hike in their daily average revenue trades, but I don't care about IBKR, so I'd be interested in how that actually relates to Robinhood, if they can actually see similar cyclical benefits, but also potentially more from just overall user count growth. That I would be really interested in. But we'll see soon enough here. We should get numbers on September 10th for how they've been doing in August. Sorry. Yeah, SoFi, I don't know what you're saying. SoFi Fireside not increasing Friday money. I don't know what you're saying. SoFi Fireside, though, for September 9th is going to happen. We're going to be showing that off on this channel. It'll be live, so we'll be able to have some fun in the chat. Yeah. Buy Futu? No. No, not allowed. Fubu. People want me to. I understand why you'd want me to buy Futu, but a lot of people talk about Fubu. Very different. Heinzie Ketchupy, man, I've been waiting for you to get in this chat. We've been actually, it's been quiet. I've just been sitting here saying, when's Heinzie going to get in the chat? But did Noto say yes? No, he had a conversation with CNBC today. Now I'm trying to tell him, hey, we can recreate the CNBC on YouTube. You need to trust me, brother. We've already gotten a couple CEOs. We've got Vlad Tenev. We got Jared Isaacman. We had Wall Street analyst Dan Dolev. Very famous Seeking Alpha analyst Stephen Fiorillo. Okay, these are great names. Now it's time that we get Anthony Noto. It's time to step up. I want Alex Chris from PayPal. All right. I got a couple other names, but nothing actually lined up just yet. Buying PayPal SoFi Hood. Palantir SoFi Hood in PayPal. I read it as Palantir, but out of my mouth came PayPal. I bought Boeing. They will rebound. I mean, yeah. I'm not a super fan. I saw, I don't know. I don't mind a little bit of messy. A little bit of messy can be an amazing way to take advantage of market fears. A lot of messy, like constant mess ups over and over and over. It's like, that's an abandoned ship. There's better plays in the market. No need to take on the risk. Hopefully you make money. I'm just not going to be there with you. You got to put a Noto poster on your wall. Okay, someone send me a poster and I'll put it right there. It'll just be me, and then right beside me will be Noto. Time to buy NVIDIA yet? I mean, hey, brother, if you want to buy NVIDIA, but I'm all stocked up. You have a printer, bro? I do. It's right beside me. What do I think about Block? I mean, I think good things about Block. I like Cash App. I mean, it's hard to not recognize a company that, historically speaking, to its own valuation, just its own, is trading much cheaper than it ever has. And they're actually looking like they want to run a much tighter ship. Cash App remains the most downloaded app in terms of finance on the App Store. I have a sneaky suspicion that maybe Chime might pass that someday. It feels like Chime is starting to become what Cash App used to be. They're having so much success, it's ridiculous. But yeah, Cash App's really cool. And then it's really the ecosystem play. I don't care too much about Square. They're okay. But I like the fact that they can do the, dual-sided commerce. They could do the ads through Square sellers into the Cash App ecosystem. Afterpay plays all throughout that. And yeah. Ross, I'm pretty sure it's the 9th, brother, not the 6th. I could be wrong. You wrote it out like it's a copy and paste, but for some reason, I still think that's wrong. I'm going to double check that the fireside chat's on the 9th. Give me 1 second. It is the 9th. I just double checked. And I checked right on their website. All right. All right. Ladies and gentlemen, that is the show. I really do appreciate you guys all showing up today. If you guys want, I'm really starting to consider putting myself more on YouTube and potentially doing some market close streams. I'd be digging in a little bit into my work schedule, so leaning a little bit off the gas there and leaning more towards YouTube, which is not a good financial decision, but maybe a good mental health decision, because this is the most fun. I love sitting here and talking with you guys. Yeah. So let me know, and let me know the types of stocks and coverage that you guys want to get from me, because yeah. Anyway, thank you all so much for watching. Really do appreciate your time, and bye for now.